Welcome everybody, Doug McKay, anti-wallstreetguy.com on the 6th of July, 2012. Closed off the lows today on the S&P, 1354, 1355 on the cash. We want to see 1340 hold. We think if we trade down to 1340, the S&P trades down to 1340, there'll be a bounce there. Whether or not that will be a bounce to just come back up to 360, which would be resistance at that time. It's actually resistance right now. And to go lower, we'll have to see. But for our purposes, that would change the trend, especially if we got below this white line here, which is probably right around 1335. So we're watching 1340. Nothing wrong with this pullback today. Healthy. Not huge volume. Off the lows for the day. But I wouldn't be surprised to see 1340 being tested. But we do have the overall trend as cautiously long at this time, and for our purposes in the managed accounts, that means the S&P 500. It also means a position in treasuries and also a position in cash. I want to cover maybe 6 or 7 charts tonight. Let's go to the dollar. We can either go to UUP or the DXY. This is a daily chart of the dollar. Obviously, we can see that this is a breakout. When we look at the ETF tracking the dollar, UUP, very close to a breakout. In a perfect world to get long this, you'd want to see kind of a fade here next week, and then maybe have it test resistance a couple times right around where it's at and or around 23, these highs, and then move on through it. If that's the case, we'd want to have our stop right under this support, thinking we'd probably at some point maybe come back down and fill the gap, or possibly, worst case scenario, false breakout. We'd have our stop right around 2250. So kind of all over the place via the euro. In other words, there's a lot of gaps here. But the chart does look good, especially if we pull up the DXY. Let's take a look at the transports. Keeping an eye on this again, daily chart of IYT. This is a line here, I think, where we sold it previously. Get that out of the way. A close above 94.40 would be bullish. If we got above 95.25 in that range, 95.30, that would even be more bullish. But not a bad looking chart, held up fairly well. Again, we have to watch for anything that trades down to fill any downside gaps, including the SPY, including the Qs, including the diamonds. But this is something that we're keeping an eye on. Let's go right to bonds. IEF. We put this in the managed accounts, not a huge position, but first and foremost because the chart was holding up, and then secondarily as a hedge against going into the number this morning. This was up higher today, but because the equities came off the lows, this closed in the middle of its range. But the point is this chart still looks good. So we think naturally that either equities or treasuries are going to give way, and I guess we'll see what happens next week. Let's pull up a chart of the 10-year. And obviously this is looks like we're going lower, which means we're going higher in treasuries, lower in rates. Could possibly be testing this 144 level on the 10-year, which would be really good for the IEF and the TLT and probably the dollar as well. Let's take a look at the Qs. I think the NASDAQ was the only indice of the 3 majors that was in the black this week, even though today the NASDAQ itself was down 1.3%. And the other ones, the Dow, the S&P, were just under 1%. But here's the NASDAQ 100. Came back down, almost tested the 50-day, right? Intraday. Kind of a support area here around that 63.70, 63.60. Any move out of this and above this 65.10, that would be very bullish. That means the odds are in favor that this gap would be challenged here, higher prices. So next week will be interesting as it has been for the first part of the summer here. I'm looking off to my right here. Let's take a look. This is a still chart we put up. PFF. Enough volume in this to trade it. This is the the preferred stock ETF. Could be looking at a huge inverted head and shoulders or cup and handle pattern. This one I think you can play tight percentage-wise. You could park as far back, no farther back than 38.50. You could maybe let some of it go at 38.75, but this is a decent looking chart. Let's see if we got above these highs today. 39.20, almost on a close above those highs. Intraday, if we look off to the box there, the high was 39.20, so the high was matched off the 629 high. So we get through that. That's bullish. It's actually a bullish looking chart right now. All right, we covered the IEF. Let's take a look at GLD. I have a couple different personal accounts that I trade in. One is futures. A couple other are just equities. One of them I got rid of the DZZ this week. Went back to cash, which was short gold. The other one I kept a short gold position. Every time I put my finger on the trigger to get rid of it, gold falls apart and DZZ goes up. So like we always say, whatever the chart is, 3-4 times you test resistance, the odds increase that the next time you test it, it's going to be a trapdoor and it's going to go lower. Maybe this was just a move back down to fill this gap, and maybe we go higher. Again, you'd want to see it get above 158 if you're looking at it as a new position from here. But boy, we start coming down around this 150. I think it's lights out for gold. The inverse of that is what I'm playing, actually the double inverse, just in my personal account, which is the DZZ. And at this time, I would just have a simple stop in at 475. All right, GLD, IEF, PFF, Qs, transports, the dollar. That's pretty much it. Not really all that interested in oil here. We'll end up with the S&P. Actually, we looked at the S&P. Again, anything above here on a close is good. These highs here. 1340, definitely want to sit up on our seat. Start taking out this 1330, 1328, 1320. Then I think it's, I think this might have been the high here. Let's finish up. I thought I looked at a chart of the INDU earlier today. I did. All right, good. I like the way this held the 50-day moving average. And by the way, these moving averages, specifically the 50, is lining up with the with support as well. So this came back down, tested the 50-day almost to the penny, bounced off it. Some news, real or not, got the markets off their lows for the day into the close. A close above 12.9 would be a reason to add, and a close above, let's say 12.950 would be even more of a reason to add. Get through 12.7, want to sit up in the seat, take out 12.6, want to start peeling positions off or hedging, and then I'd let it go if it broke 12.5. All right, you guys, that's it. Doug McKay, antiwallstreetguy.com. Finishing up with the S&P cash. The overall trend is modestly bullish, cautiously bullish. This could have just been a very healthy pullback and we're going higher. Or this could be the start of, going lower. So we'll see. All right, that's it. We'll see you guys next week. Thanks.